Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Now, last night there were three central banks that cut rates from New Zealand, from India, and Thailand. Now, the New Zealand dollar, we watch very closely because we also talk about the Aussie and keep a pulse on that and trade that very often. What we had seen in the New Zealand dollar last night, there was a floor at 65. Punctured through there. We're seeing some sort of capitulatory price action coming off of that low. The Aussie dollar very similarly has come back off that low, 66.85. Support was 68. Now you have resistance at 68, but what we're seeing here is that, again, that capitulatory price action coming off that low. We can see a tailwind up to 68.40 to 69. It's a wide range, but that's in play right now, so keep an eye on that for the Aussie. Another very constructive chart is what the yen has done over the last 24 hours. We had major three-star support. Now, we had a pivot level about 94.5. That would have kept the market in a very strong uptrend and the bulls in the driver's seat. We said once it gets below there, you're going to see it fall out a bit, and it matters, can it be constructed from there? And yesterday's session did exactly that. 93.60. That was major three-star support of the yen. It pinged that, and it's recovered very strongly back up to that pivot 94.40 here today. So again, very constructive price action in the yen. But now the question is, what does broader risk sentiment do for both the yen and the Aussie? Because one's a risk-on asset in the Aussie, and one's a risk-off asset in the yen. So we're seeing the S&P close about 100 points off the low earlier in the week. Can it continue to see a little bit of tailwind? Do we see a little bit of relief in the trade war narrative? That's what the question is going into the back half of the week. So again, we're seeing constructive price action in both, but is one going to carry further? And that's what we're waiting to see here. But those are the levels that we're looking at, and that what matters going forward. Now, looking at the euro as well, the dollar is building a bit of a floor at 97. The same way you're seeing resistance at 112.70 in the euro. Now, we said through coming in today's session, holding above 112.25 was constructive, but we really needed to see a higher close, and we did not really get that today. Out above 112.70, it leaves the euro now vulnerable as the dollar index is building support at 97. So we are seeing the potential of a wave lower in the euro and potential recovery in the dollar back up from 97. Now, if we do see a move in the euro back below 112, that's when some of the selling psychologically can start to kick in. German industrial production data early this morning, it was some of the worst in the last decade or on a year-over-year basis, and it missed largely on a month-over-month basis. And that overall, very surprisingly, to see how well the euro traded through today's session, and that is fundamentally constructive. But on a technical basis, again, it's a little disappointing not to see any follow-through above resistance. Now, for the Canadian dollar, lastly, it pinged 75. 75 was our next support level. It's held it. It's finishing out about 75.25. Ultimately, it's going to rely on that broader risk sentiment, and arguably, you're seeing the Canadian dollar hold very well given what crude oil has done. Crude oil made a new low on the swing. It's the lowest level since January. Brent crude is the headlines. It's in a bear market territory. What we're seeing here is a lot of pressure in some of the commodities, and the Canadian dollar is kind of shaking that off right now. So can it remain constructive? Again, you got to see it close back above 75.60, 75.80 in order to neutralize some of that tape. And again, it's going to matter what the broader risk sentiment does. Feel free to give our desk a call. We're here to help, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of research. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks.